Good morning, everybody. Welcome back to another day here on YouTube and in the stream. So yeah, we are just currently on a little bit of a pullback in the pre-market session. I would categorize a lot of that as because VIX is currently breaking up in momentum, so markets are a little bit more fearful, therefore pullbacks are a little bit more aggressive, so on and so forth. So that being said, markets are still in they're still in an uptrend. What's going on, Sam? Good morning. Yeah, markets are still in an uptrend, but again, we're just kind of, you can see over the past 2 days now, well, 2 days being yesterday and then obviously counting today. Going on, Petey. You can see markets did what here? Pull back. And then markets this morning are doing what? Pulling back. I would say there's always more to it, but one of the main important things that I think about today when looking at it is the volatility index, which I'm trying to bring over to you guys. 1 second. Here you go. All right, so if we think about yesterday's action, right? What did we see? We saw this big pullback, right? So yesterday we pretty much pulled the market back, all right? What did we do with the VIX yesterday? Yesterday with the VIX, we broke the VIX over the 50 SMA, which is right here, right? So we took the VIX into a long move up. So we essentially took the VIX into an uptrend. So we were increasing fear yesterday. We were increasing volatility. And as a result, we pulled the market back, okay? Now what? All right, so now when we go and look into this morning, what do we have, right? We have another pullback this morning, all right? And what's going on with the volatility index? Well, we know, and I'm looking at a regular trading hours chart now, but we will put this, turn this into a pre-market chart in a second here. We know that volatility remains in an uptrend and fear remains elevated if the market is above the price of 16.28. Another way of saying that is volatility remains in an uptrend as long as we're over 16.28. And if markets remain more fearful, or if volatility remains elevated, then you are more likely to see scenarios of harsher pullbacks, right? Which yesterday was a decently harsh pullback. So far this morning's been a pretty harsh pullback. It's not like a little blip down and then back up, right? We've had a pretty good structure down in those moves. Generally, that's more likely to happen when you have increased fear in the market, which we currently have, mainly just because it's in an uptrend. So now let's go look at the pre-market today. 1 second. I'm going to this chart. Well, let's do it like this. So we're going to go into here. All right. Yeah, sorry. 1 second. Let me put this on like a 1 minute or maybe even a 5 minute would be good. All right. So looking at the 5 minute chart here, what can we see, right? We see this yellow line. I also look at the 1 hour. I just didn't map it off, but anyways. So yellow line, that's a 30-minute over-under. Essentially, if the VIX is below that, we could be starting a new downtrend. Above it is still obviously holding. So ultimately, what do we have this morning on the volatility index? Yesterday, the volatility index, I think it was right around here. I think this is where the 50 SMA was. So the market moved up to the 50. All right, so market moved up to 50 and then went into an uptrend. And then overnight, the volatility index sold off back to the 50 SMA, which is now priced at the new yellow line. And this is the uptrend, downtrend dictate kind of level. And tried to break down for a second. We recovered here, create a little bull flag even on the 5 minute over the 50 SMA. And then market goes back into a long. So volatility is staying increased. Fear is still in the market. So this morning we have a pullback on the market. All right, you can see we're pulling the market back. We're bouncing the volatility index at support, which is the 50 SMA pretty much over under. All right, so that's essentially how we've been able to pull the markets back the past 2 days using uptrend and support tactics on the volatility index. And so, again, if we look at, I'll just bring up SPX here instead. So, um, again, markets are still positive. We're in an uptrend. They're not negative, but we're just using the uptrend starts on the VIX to pull the markets back within that uptrend. So we're creating pullbacks within an uptrend using the volatility index. Ultimately is the way I would read that over the past 2 days. Okay, so the narrative, what's the narrative right now? The narrative would be stock market is still positive, but we're also getting positive signals on the VIX. That's usually kind of a head scratcher, right? It's like, why is the VIX positive and the market positive? When we start to see that, generally people do what? One second. People, market, tend to hold off on the long, slow down on the long. So yesterday, right? So think about yesterday. Markets are going up, things are great, things are good, things are great, and then all of a sudden, right into the open, market open, we get a little selling pressure, and the VIX starts to break out into an uptrend. So what do? We pause on the long. Algorithms say, hold on. Why are we increasing fear into an uptrend while markets are in uptrends? That doesn't quite make sense. So then what we're going to do is we're going to stop buying long. Even though the market's still in an uptrend, we're just not going to be aggressively buying the markets because fear is telling us otherwise. So then we become fearful. And our thoughts are, well, if the VIX is breaking out and the market's in an uptrend, doesn't that mean the market should go down? Or maybe it should stop going up at the least. Maybe the market doesn't even have to go down. Maybe just the long slows down, right? Because, just because the VIX is going up doesn't always mean the markets are just going to get, pulled back really hard. So, nonetheless, markets get fearful. We're going in, so we just stop going on long. We pull the markets back. And so the same thing is happening this morning. We're breaking the VIX up a little bit, so markets are just a little bit timid, a little bit fearful to be just aggressively buying the markets up long here, right? So that's part of the relax. Now, as far as other TA metrics go, I mean, there's a whole multitude of them. We could be looking at Fibonacci moves, and so on and so forth. So nonetheless, we're just pulling markets back due to volatility increase and so on and so forth. All right. Let me put this back up here. I need to delete this. And where's my 1 hour? Yep, don't gotta worry about that. Good. Okay. So while the volatility index is positive, we're going to remain timid long. All right. So again, good morning, Steve. Again, though we're in an uptrend, though markets are still positive, we're not like gung-ho long bias the market. And the main reason why is because the VIX has fear increasing. So we're kind of timid long on the top right now. Unless the VIX were to kind of break back down. Then we would get a little bit more comfortable to be more aggressive long markets, and so on and so forth. Remember, the best time to always be the most aggressive as far as bias is when you're shifting into a buy signal, right? So if we go back to SPX, again, generally speaking, the best time to be the most aggressive long is when you're starting a new buy signal, right? When to not be so aggressive long is when the market goes up and all of a sudden you're in a buy move, but you're seeing, for example, the VIX start to go positive in your uptrend. That could be an early indication that markets could do that, right? The best time to be aggressive long is when the buy signals just start, and then as they go up, if for whatever reason you're in an uptrend and then you see the VIX start to go positive, you start to get timid long because maybe the VIX is trying to signal something. Best time to do aggressive markets is when you go into a buy signal and then as the long progresses, you start to get timid when you see the VIX go into a buy signal when you're already in an uptrend. Okay, that makes sense? I know it makes sense. I do a pretty good job at dumbing things down, so I think that was pretty good. I like that one. I'm gonna have to use that one for the future. That was a pretty good one. So again, that's how we use the VIX to be like, are you trying to tell us to slow down on the long, right? And so VIX can give you early indications where markets don't, right? And so that's what we're doing. So again, what's the narrative? Narrative is markets are still positive, markets are long, bias, macro, trend, but VIX is starting to give us some fearful signals or signs to be slightly timid on the long. Does that timidness turn to full-blown, bearish trend? Never know. But the signals are there, and that's why we're decreasing the markets this morning, arguably. I don't even know. I don't know if there's any. There might be some economic data. I don't even really know. I used to look at this stuff a little bit more closely, but what do we got today? Friday. We have unemployment, which already came out again. That was at 8:30. And then we got some stuff at 9:30, some stuff at 10. So a couple little things to work off of there in that regard. Yeah. So it's at 8. What is that? Interesting. 8:30. Like zero reaction from any of that stuff this morning. Yeah, U.S. unemployment rate delay. Oh, that's why they're delayed. I didn't read that last part. I'm like, that's odd. Oh yeah, because government. Yeah, they're. That's good stuff. The world's still moving. You notice that? The government is shut down. You can still grow food. You can still drink water. You could still go fishing. You could, in theory, still drive a car. Breathe air, oxygen, talk, do math, read, go on the internet, drill oil out of the ground, continue to make electricity. There's a lot of things that are still, all in all, pretty much the world will not end. So that's a good sign. Another thing that I haven't mentioned yet, but it is the 10 SMA. So if we look at SPX and, we have to go to the SPY for this one. But if we look at the SPY, go to regular trading, we go, where's the 10 SMA? 10 SMA is right there. And then we go into extended trading hours. We would go like this. And we have a 10 SMA down here. So again, this could very well be a price point that markets want to sell down to, with it being the short-term 10 SMA and the 30-minute, yada, yada, yada. Again, as long as fear is increased, we're not going to be extremely long biased for the moment, but we're not extremely bearish just yet. But anyways, so that being said, we will look for markets to be counter pop / bearish below here. So right now, again, with the pre-market trend, we know that the pre-market trend is established down for the most part. It doesn't mean that the market won't trade long today, but ultimately this is our counter long pop level and or resistance below. All right, so if the markets don't just drain out, then we'll most likely look at a long move back to here. And if they hold resistance, we can continue to look downwards. If we're above, then we're going to continue long. So this is pretty much it, right? So probably looking something like that for the day. Whether it plays out nicely or not, counter trends are as far as that. I will only be bullish to here for the moment. I could look for rejections for resistance into that level. And or breaks for up and above. Obviously, reading the market internals is what it's going to come down to there as we go into the open. So yeah. You know, guys, in the general kind of rule of thumb here is that if you look at how big this sell-off is pre-market, generally you're not just looking for it to keep selling off. You're always kind of expecting a pop back, right? Or the other thought is if you wanted the markets to keep going down, generally you want to see it reset. You don't want to be selling and shorting into a low, hoping it goes lower, right? You always kind of want that reset. Something else I'm also considering too that we may use. Now this you guys saw yesterday where we were talking about the SPY and it was coming down and we're like, yeah, you know, where could we be looking for support? Where can we arguably be looking to bounce the market? And I said, we'll look at the volume weighted average price of the last 30-minute low bottom, which would be back here. And we're like, yeah, this is arguably where we're going to be looking to at least have some support for now. So we would have said, not would have, that we did, all verifiable in yesterday's stream. We said, hey guys, as the market comes down in these 30-minute VWAPs, this could be a 30-minute high or low kind of hold location. So we're going to be looking to first attempt into pretty much this area. You'd be looking to kind of bounce. All right, we're going to go back to yesterday's action if you want. So yesterday's action, either way, this was our bottom. So our bottom was here. That was our 30-minute VWAP, and it shied the lower one, but ultimately came into VWAP 1, did not hit VWAP 2, but ultimately VWAP 1, double bottom, long, right? And that was right off our 30-minute volume weighted average price zone. They'll work sometimes they won't work, whatever. But anyways, there's yesterday's bottom right at our suggested 30-minute volume weighted average price location to look for a bounce. So we've done that. And I would assume the market has retraced the top down 30. So if we looked at the top down 30 here, we probably retraced that guy, high, low, yep. So we've retraced top down 30, kind of as expected. So if we look at the new 30-minute trend settings, low, do we tag? No. And then you have one here. Yeah, I don't know if I really like it right now. We'll have to wait on that. But currently the 30-minute trend's a little lower. So if we continue to do a lower low, higher high, higher low sort of trading fashion, that would tell us we are going to be trading down into this area. Right, because again, if the 30-minute, and again, none of this has to happen, but I mean, again, there's only so many places a market can go. It can only really go up, and it can only really go down, right? So at the end of the day, there's only so many places it can really go, right? So if we were to continue doing the 30-minute higher low, higher high, that would mean, right? So this is just right yesterday's 30-minute bounce. Here's our low, and we kind of have a new low. The trend would be established here, right? So this would be, so if we continue that formation, it would be this. All right, and then it would be either bounce or break down, right? So that 10 SMA price point, kind of a little bit of a magnet area for the day on the downside. Obviously, that's only going to happen if when the market opens, things remain bearish and continue going down. We'll see. As I said before, the VIX is currently on the positive side of trend, so it's a little, the VIX and the fear is elevated, so obviously we're not really long bias in the moment. We're kind of on momentum sell side, and I would again say that's partially because that that volatility index and the fear has increased this morning. Yes, I know you don't see it on my chart right now. I'll bring it up. But that's what I see is going on. Here's the VIX. This yellow line right there. Once over that yellow line. So VIX is positive over this yellow line, right? So, you know, while fears increase, it's going to be harder for markets to really trade super aggressively long. So what we're going to need to have happen for, right, any sort of counter pop is the VIX is obviously going to have to come down and blah, 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 so on and so forth. But as the VIX continues grinding up, will most likely be bringing the markets down. Now, again, in the event we do get this little pop back, it's going to arguably be, towards the volume weighted average price of the pre-market high on that 30-minute scale. If we don't get the pop back, that's fine. We'll probably be looking to run the markets down towards that 10 SMA price, give or take a little bit. Okay. So again, really for the moment, the two scenarios I kind of see would be basically sell off down into and or pop back to volume weighted average price, right? And then you would still be looking to be, all right? But we're just overall leaned slightly on the bearish side of things because of the volatility increase in the uptrend in fear that's taking place this morning. And as long as that is holding, we're probably not going to be able to push the markets up on the long for the moment. TMF, sure. Let's see. TMF. It is currently in. It's currently in a uptrend. It is currently. It's currently in an uptrend. Daily's in an uptrend. Wait, that's a 10-year. I'm going to do 1 year. Where is my 1 year? That's weird. That is odd. Oh, I'm on the 1 year. Sorry. Messing up right now. So it looks like the 1 year weekly isn't quite in an uptrend. So if you're going to get, essentially long grinding gains from TMF, you want it to be in a weekly uptrend, which it's not. It hasn't quite done that. It's been in a weekly downtrend, and you've seen it go from, essentially 53 to a low of 33, being below the weekly. So let me just bring this up real quick. So again, we're below the weekly. So it looks like price is right at the weekly too. So this is also a very important price point for your for the stock TMF, being at that weekly 50 SMA, right? And so like if we go back here, you can see we've done a short-term uptrend. So this is a 30-minute uptrend. So you can see once the market gets over the 30-minute, there's your 30-minute uptrend. Here's your 30-minute support back test, and then your long bounce off the 30-minute. And then obviously it's still holding support and it's grinding up. And this yellow line that you see right here that I'm going to grab and start moving, this blue line, but now it's going to be yellow. That's your weekly. So we've essentially done a short-term 30-minute long and also a daily chart long back to weekly 50 SMA. And if we go take a look back at that weekly 50 SMA, what's it look like? It looks like this. So you're in a weekly downtrend, arguably at the start of a weekly uptrend. We'll see if it gets acceptance, right? And in the moment, you're not at the start of a 30-minute uptrend. So a 30-minute uptrend is generally a good uptrend to follow for short-term activity and involving yourself in trends. So anyways, that's it. You're not at the start of an uptrend. You're actually at the start of weekly resistance that has yet to get accepted above. So if you ask me, this is not particularly where I would be focused on entry. My entry, if I was following the stock religiously, I would have tried to been buying it back here for this 30-minute uptrend. So if we go into, say, we got to go into a pre-market chart now. So if we go to a pre-market, which this one you don't even get the or wait, am I on a pre-market? Hold up. no, that's not pre-market, or this is down here. If I go into like a 5-minute chart, 5-day, 5-minute back here. So this is when the market went into an uptrend right there. All right, so that's where I'd be focused on, is when the market got back above this, I'd be getting long. So I'd be trying to get basically long into there, right? And then my stop would be below the yellow. Now, if we look at kind of a couple days back here, on this day, pre-market, this is where the 50 SMA was. So the market was bearish, and then it got over the 50 SMA right here, and it popped bullish, right? And back to some, so, but it ultimately failed, and then it went long here. So the system isn't perfect in that sense. You're going to have some false moves at times, but ultimately, if you look back to, again, your 30-minute, you're going to see where does the market, and let me bring this back a little bit more. Let's go to like 15 days. All right, so there, that's a better view of it, right? So if you look at it from this view, right, below the SMA is bearish. When you get back above the SMA, it's bullish. Okay? So, the low risk entry was when the markets crossed through the SMA right there. Now, at the time, did you know it would result in a great uptrend? No, but you just know that that's the starting point. All right? So, when you look at what happened that day, and let's zoom in back on this 5-minute. All right, and let's go over. It was right here. I'm just going to add it for the sake of. There it is. That yellow line. There's a lot of craziness on there. I'm going to delete all this off again, and then we're going to go look at that yellow line, and it was like right about like there. All right, so we know that the uptrend started right where I'm pointing with that that white line where it meets the yellow. So that's where the uptrend starts. So if you ask me about TMF and I followed it religiously, I would have been trying to add long on this day pre-market as it broke over that SMA. All right, and since then the uptrends worked. But right now, so now what's happened? Now the market is traded up, and where is it coming into? It's coming into, go to the bottom right screen, your weekly long-term 50 SMA now, and I'm going to add a line there, right? And then we'll go back into this pre-market chart, wherever that was. All right, so what we've seen is we've essentially seen a 30-minute long. There's also a 4-hour and a daily long taking place, but I'm only looking at the 30-minute for right now. We've basically seen a 30-minute long run up to the weekly downtrend 50 SMA. So what you just saw was a 30-minute uptrend, a daily uptrend, and a 4-hour uptrend break out and go to the weekly 50 SMA downtrend. And now you're seeing resistance, failed moves above at the weekly 50 SMA. Okay? So only if this weekly 50 SMA, for whatever reason, allows it to be flipped into an uptrend, will you see, market appreciation on TMF. For the moment. So anyways, hope that makes sense. Hope you like, and yeah. Cheers. Also, this is Friday. We never really expect phenomenal trading days on Friday, so when we do get a good Friday, it's kind of like a bonus. So don't get your hopes up on some crazy, awesome trading day. Again, we're not trying to, we don't want to be getting anyone's hopes up. All right, so again, we're going to bring back the VIX. All right, so what do we know too? So we know when we look at the VIX this morning that volatility's been increasing. Let me make this full screen, and we have bounced the 30-minute and the 1 hour. So the best case scenario for today's market, all right, is for longs, right? Best case scenario right now for longs is that the VIX and this long move, right? So this long move at the open comes back to back test its breakout, right? If we do this, obviously, it sounds dumb saying it sometimes, but essentially the VIX has two options. Either the VIX blows up from it just being in an uptrend, or we're going to have to pull it back to back test its breakout, which would be where? Which would be down here. So if we don't just keep blowing the VIX up from its kind of break of its uptrend here, then we must back test the uptrend start, and that's going to be back to the yellow. By pulling the VIX back to the yellow and back testing the uptrend start, we're ultimately going to do what? Probably create the market to bounce. So if we can pull the markets back on the VIX to back test their uptrend start, that's when we're going to look to take the markets up to that yellow box, right? That's how that's going to work. If we, for whatever reason, were to keep blowing the VIX up on that uptrend, then we would look to do what? We would look to start selling the markets further towards that 10 SMA. So that's kind of what we're doing. We're kind of leaning on this VIX a little bit, looking at the market and kind of going, all right, well, which way do you want to take this market today on the VIX? Granted, you know, it's, what time is it? 9:24. We still got a couple minutes, and the VIX is going to close and blah, 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 and yada, yada, yada. But you get the point. So we're going to get into it here pretty soon. So we're just going to remove these arrows because they're kind of just a little big and annoying, but you get the point. Yeah, Mustafa Fatah 40. Yeah, hopefully that helped. But I probably should, because I know what's going to happen, and someone's going to come in the stream and be like, what are we looking at? No, so we're just going to put a couple things in the screen. Counter target or no. Here. Yeah, and then we'll put all right. Yeah, I'm gonna go get a cup of coffee. I made a pot a little bit ago, or at least I thought I did. I clicked the button, but it didn't make a pot, so then I had to go redo that. Now it's ready, so I'll be right back. Alrighty, I am back. We are back. Are you guys ready for an absolutely crazy day? Speaking of, did I miss something? I don't know. Of course, of course. Yeah, so I wish. I always say that. I mean, yeah, I do. I wish there was more to say, but I mean, there's really not. All said levels are already on the screen. Before we know it, the targets are going to be hitting. Do 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 do. Bing bang boom. Oh yeah, that is a wild day driving all the way to Maryland, kids. What is it, soccer you said, or hockey? Sorry, hockey. Yeah, Suns hockey, travel hockey. I was never a part of any travel teams. I did like travel soccer for like very, very minimal time. But friends that always did travel hockey, and I remember they were just always, it seemed like every weekend they're out of town doing something, traveling other states. I'm like, man. All right, guys. So our counter long target for the morning is complete as far as that strategy and that system. That has nothing to do with the remainder of the day, but just that early morning targetable trading event from pre-market into the open. It's pretty much complete. We still got a little bit more there, arguably, to go. All right, we pretty much completed it right there, as we said. So there's our counter long target completing. Cheers. Like I said, not a whole lot to say. It's all on the screen. Remember what we said too, as we do what? As we complete the counter target, what's going to happen to the VIX? We're going to bring the VIX down where? Into its pullback targets of these two yellow lines. Why? Because that was where the uptrend started. So if we don't just continue to break the VIX out, it has to do what? Pull back. Where does it pull back to? To the yellow lines. Why? Because that's where the uptrend slash breakout start was. So that would be the back test of the breakout. And there's the completion of our counter long target. Now remember, the most important thing, look at this one that I'm moving. Remember, guys, this yellow text that I'm moving, read that. Stock market is still trend positive. Okay, so what's that mean? The overall trend is long bias. We're not bearish, the market. We're only bearish when we have bouncing and uptrend starting on the VIX, right? So the overall trend's positive. We only flip bearish when the market goes into a downtrend or the VIX is just starting bounces or uptrends. Right now, what are we doing? We bounced it, momentum slowed, couldn't keep going, so we're what? We're back testing its breakout, which also would be what? The start of a potential downtrend if it continues. If the VIX does not hold its support here and flips into a downtrend, what do? That's a catalyst to keep blowing the market up long. Right? Because yes, we know that the market is in an uptrend. The stock market, SPY, SPX, they're in an uptrend. We already know that. What we don't really know is, does the VIX want to hold its 50 SMA uptrend, or does it want to break it back down and then go into a downtrend, right? That's what we're deciding. And that decision is what's going to make the move for the markets next. You know, realist, not entirely, but yeah, it is. So I hope that makes sense. I'm trying to be as clear as I possibly can with this stuff. is this going to allow you to trade every single moment of the market? And not necessarily, but do you wake up and know exactly what's going on with the market every day? Pretty much. At this point, it becomes, that's not entirely true, right? Like Trump could tweet something and you have no clue, and some news could break and algorithms change and, what have you. But, at the end of the day, these trends repeat not every single day, but, day in, week out, month in, month out, year in, year out, etc. So as far as it repeats pretty frequently, I guess. So there is our pullback targets on the VIX, essentially completing, coming to fruition. Again, as a result, what are we doing? We're taking the markets long. So like I said, the only way we do what? Continuation sell target with continued uptrends in VIX and fear, waiting to see that, right? Otherwise, it's counter target here. Stock market's still positive, and we're waiting to see, does the VIX do what? Continue to blow up, or is she coming down? She coming down to target. So short-term counter long up, right? And remember what we said, you never want to be bearish at the bottom of a move. You're always looking for that counter pop. But as the VIX is still in this uptrend, I'm kind of like slightly timid, right? Because I want to see, does this uptrend hold? If so, we stop this long, right? If this just fails, then this is just going to keep blowing up in the long. So, yeah. All right, so we're all good on the VIX. We know what's going on there. We know what's going on with the market. I have enough text on the screen, but I'm going to go down to a 1 minute now because we're going to start looking at some 1 minute volume weighted average price stuff to the upside. So let's see. Because now we have the open, right? So this is what it comes down to. Now we're going to track the volume weighted average price from the long that started today. And we're going to say to ourselves that that is our 1 minute micro trend pullback, which we've kind of already done it a couple times, but kind of weird looking. So this is now our over under, all of this right here. Above this, market stays higher. Below all of this, then arguably market could fall down. But again, that's all going to be built off the back of what? The volatility index here. If the volatility index breaks down all of this, so this would be, the next target would be down here to like 1627, right? So we're expecting the markets to kind of stay up for the moment as this arguably falls to 1627. If 1627 breaks, then we should just continue higher on the market. If 1627 can hold a little bit, that might cause some hesitation, but for the moment, we're working the VIX down. We're going to stay on the long side of the markets just for the moment. The last thing is to start checking some of the market internals, which I haven't yet done. Let's see. Which I'm actually kind of shocked right now. Hold on. Yeah, I don't even... Yeah, I'm kind of shocked. This is a weird morning. Guess it's a Friday. I was going to say, the market internals, I don't think make sense for this move yet, but that's beats me. Really goofy. But, okay. I mean, it kind of does. The market internals are up. Some of them are moving long, but not as much as I'd like to see yet. So, kind of weird. Not normally the situation. But either way, same story as always. Market pop back, counter levels, and then we've basically sold the VIX down to our pullback targets and just blown the market up. So we are still swing long the market. I myself still have some skin in the game with UPRO long, so I'm still have long position on the market for swing long. Again, there's no signal yet to be fully bearish the market. So Again, just going to do a little reminder here. Where did our buy signal start, everyone? Oh, we also have a gap up. We already hit the 161 on the gap up, too. I can already see that. Let's just see, though. I wonder if we're almost at the 423. No, we hit the 161. 261 would be next, but anyways. Yeah, so when did our swing long start? At the smiley face. That's where the swing long for the market started, right? So we know that the market is only bearish below here, or when the VIX is obviously breaking out, which it kind of did this morning, and that's how we pulled it back in the morning. But remember that the VIX is just like it's like the sidekick, right? It doesn't rule. What rules is the market, and the market is positive, and it's far from its 50 SMA. Right, so we still have a long time for this buy signal, or B, for the markets and the 50 SMA to catch up, right? There's only two ways the market goes into a bearish breakdown. Either the market just automatically sells off down below the 50, or the 50 SMA ends up catching up to price eventually, and then price goes through it, right? So, again, markets are still long bias. We're still in a long bias environment. We're just using some of those short-term signals on the VIX to dictate immediate momentum on the market, right? So, yeah. I hope that is all making sense. But like I said, I'm actually kind of surprised, though, with how well this market is moving to the upside, because today the market internals are okay. The volume is long. Volume for the market is on the long side. The advancing declining issues on the Nasdaq are up. The advancing declining issues on the S&P 500 are up. Advancing declining issues on the New York Stock Exchange are up. But of the Nasdaq 100 and of the Magnificent 7, we actually have selling pressure, which is kind of unusual. Generally, if these are moving well, the markets aren't pumping as much as they are. That being said, I haven't really looked at the Qs. See how the Qs is super red? So there's a lot of divergence. So again, this could be a situation where eventually the long on the SPY runs out. And that's what I was kind of talking about a little bit ago. I'm like, it's just kind of, it's goofy because where did my thing go? That is so weird. Why does that do that? I'm going to delete this one. Yeah, that's what I was saying, is like we have some buying going on, but we also have some selling. So markets are not all working together for the long right now, right? It's still a little and what did we just see here? We just saw on the volatility index, right? You're starting to see what here? Starting to see on the volatility index this hold of support. See how we said it's going to pull back to here, and then we got to see, does support kind of happen here? Well, it's happening for the moment, right? So this tells us that the VIX hasn't fully broken down into a downtrend. So there's still some degree of fear in the market, right? And so far, even with that some degree of fear in the market, you can see that the Magnificent 7 are selling, the Nasdaq 100 are selling. Everything else is fine. So we do have some divergence playing in the market. That's why when we look at the QQQ is red today. And when we look at the SPY or SPX, it's green. There's more things moving in favor for the S&P 500, New York Stock Exchange, etc., Nasdaq, blah, 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 blah. But a lot of those FANG and Nasdaq 100 are not performing today, at least yet. So that tells us two things. Well, now you're looking for the trade of hands, right? Does the SPY end up catching up to the Nasdaq and pulling, or does the Nasdaq selling stop and then rebound with the SPY, pushing the SPY higher, and then Nasdaq ends up playing a little bit of the catch-up game, right? So that's all going to come based off of the market internals. So essentially, if the SPY or if the Nasdaq is going to be the one to play catch-up, then we need to start seeing support come in on the FANG, Magnificent 7, and Nasdaq 100. All right. Vice versa, if the selling starts to come in on the NYSE and S&P, then the SPY is going to be the one playing catch up, which would be bearish, etc. That being said, the markets are in a buy signal. it's kind of a tricky one. I would still probably have to lean more on the long side because obviously the markets are in a buy signal, so I would still be leaning overall mainly on the long, unless for whatever reason this VIX really blows up out of the support here, and then I would say we got to maybe start to pull it some more. But right now, for me it's kind of a little soon to tell. So I'm going to get back into SPY here and go back into the 1 minute, etc. Also, not that it was on the screen, but remember we were just talking about where the pullback would basically be and where the over-under is. It's updated a little bit since then. It actually needed to be up a little bit. So it'd be right here would actually be that pullback target. So you can, it's worked pretty close. But ultimately, that's where we're at, right? We had the long press. We've had the yank. Now it's holding, right? So is this where we lower high on the 1 minute or not, right? So now what we're doing is we're bouncing this market in the immediate back up to where the volume weighted average price off the high of this move. So if we take the VWAPs and we throw them to the high, right? And we go like that and we take the breakdown candle, you can see we're pretty much going to be popping to right there, which we've pretty much done, right? So that's our counter pop. And now this is where in the immediate, the 1 minute market has the opportunity to lower high on the SPY, right? And if not, then the 1 minute market gets squeezed out. So this is where, right, if the markets were to lower high from here, they would do it here, right? Or this is where anyone trading that lower high in the 1 minute gets blown out, right? Vice versa. And so what we're doing, again, is looking at these market internals here. And so far, some long is coming back on the NASDAQ 100. There was a little bit coming back on some of those FANG names. You still have decent momentum up on everything else. But what are we seeing, though? This VIX is getting a little interesting. That VIX is still holding there, so... But again, like I said, I'm still lean overall long bias because obviously trend is macro long bias. So that's the way I got to lean for the moment. Again, it's also Friday, which basically means we never really expect markets to be super crazy on Fridays. So, you know, there's that, I guess. Oh my gosh. This thing get where it's supposed to go. Steve, he said, all right, so what if price crosses and closes above the 50 on the 30 minute, but the 10 has not crossed over? Would you still consider that the start of an uptrend, or would you wait for a cross for confirmation? So Steve, you're pretty much, that's a great question, and I've got it many times. And my answer's never really changed since probably the first time I think I've really started answering that question. It's a matter of we pretty much know if the uptrend starts over the 50, right? Now, we also know there can be false moves above the 50, right? Where, say, it looks like it's going to go up long and it starts going and then it shortly falls apart and then it goes down, right? Now, that raises the question, should we wait for the 10 SMA to get above the 50 so there's more confirmation? And it all comes down to the longer you wait for confirmation, you know, more of the move you miss, or you're not right at the start point, okay? So if the long move doesn't end up being a good long move, then you're buying higher into the uptrend, right? So then you run the risk of getting caught into a pullback and it being red. So it really just becomes a game of the longer you wait for confirmation, you know, generally speaking, the more the move is already started, and your risk elevates in the sense that you're further away from the 50. Your buy point then becomes further away from the 50, which is where the trend is dictated at, right? So that's really what it is. It's like you wait for more confirmation, right, to hopefully have a better buy, but then your risk gets elevated back to the 50, and or the move is kind of already underway. So however you want to do it is up to you. I've done it both ways. I personally just try my best to get in around the 50 SMA, or when the markets are moving up and down through the 50 SMA. And I do pay attention to the 10 SMA, right? If I'm getting along the markets, 10 SMA is above the 50 SMA, that's obviously in the back of my mind, etc., etc. And yes, I'd love to see it get above, but if it kind of starts to fail to do that, then I tell myself maybe this is just not the right long. But the reason that I like trying to get in and around the 50 SMA as opposed to waiting for a 10 to go up above it is because then your entry is much closer to the 50 SMA. So even in the event the long falls apart, your entry is at the exact price that you'd stop out, right? Whereas if you bought when the 10 goes over the 50, say you buy $1 over the 50 SMA, and then, tomorrow, say you buy $1, $1.50 above the 50, and then tomorrow the market goes to back test the 50. So then you get caught in this harsh pullback down to the 50 SMA. So now you're at $1.50 on your position. Meanwhile, the market's still actually positive. At that moment, you don't know for sure if it's going to remain positive or if it's going to eventually break down. So if you're going to hold for the, to the 50, you're down $1, $1.50. And if you're going to hold to see if it breaks down, then maybe you're down $2 or, whatever by the time it actually breaks to 50. Versus if you enter at the 50 and then tomorrow goes the back test to 50, you're just break even, not even red yet. So that's the idea, is that if you can be in right at the start point, then your risk is obviously, your risk reward is always the greatest, but then you run into the scenarios where you're too early at times, where you're trying to get the market to go long, but it's just not quite ready. So your risk, to me, decreases in terms of, profitability making, and then where your stop is at and stop loss, but your risk increases in the sense that you can put yourself into trades too early, because the market's just not ready. Because markets aren't like binary in the sense that, price goes to this level and as soon as it goes above, it's fine. No, it's not how it works. Algorithms run the markets, right? So what they're going to do is they're going to run it to the 50 SMA, and if the algorithms want it to go long, it's going to go long, right? And if they want to hold it there and chop it or whatever for an hour and a half and then run it long, that's what they're going to do. And you have to try to identify that for yourself the best you can. And it's not always easy. But one thing is certain, is that we know at the 50 SMA, no ifs, ands, or buts, that's where uptrends start in the market for equities, penny stocks, stock market, you name it, volatility index. That being said, the people that control the shotgun start at the start line, they're the ones in control. The ones that sit there and they go, line up, are you guys ready? And then we're the ones that pull the trigger on the cap gun that tell everyone the race has started. And you don't know when they're going to pull that trigger, and you don't know exactly when they're going to start that algorithm, but that's how it works. All right? We know where the race starts, and we know ideally when it's going to happen, but we don't know the exact moment that the referee of the race is going to pull the trigger and tell everyone to go, right? That's all computerized algorithmic stuff. Again, guys, I wish I had more to say. We're just long biased the market still. Now, I know we talked a little bit about, maybe we'll pull the market back, and I'm lean slightly bearish this morning for the moment. That's mainly because the VIX volatility was going up, right? So we had to be bearish while the volatility is going up. And then once we kind of saw it slow down and realize, all right, well, now we can pull it back. You have to go back momentum long. Overall, we were always long bias for the macro swing trend, right? But there's moments where you're going to have pullbacks on the days and things change. So, but anyways, it's just overall long bias. And why? That's just because, again, the markets are in a Markets are in an uptrend, so markets are just long bias. We also are coming into the 2618 extension of today's gap and go, right? So if you look at today's gap over, well, or the overnight, actually I did that wrong. It's a little off because I did, excuse me, drinking coffee and burping at the same time is not ideal while you're streaming. Yeah, so now it's accurate. So we've already hit the 261. So there's our 261 hit, 261 Fibonacci from the overnight gap. Basically, it's just an over-under, right? So this is how you can see if you look at the market off this gap and go. Again, market overnight gapped, so that's an impulsive move in the market. So we measure the impulsive move from open or previous day close to current open. So that's an overnight gap. So we consider that be like an impulsive move from the overnight. And then with the gap and go, you go from obviously the 100 or whatnot to 168, little resistance over and up into 2618, etc., getting a little resistance, yada, yada, yada. Again, guys, something very interesting is that the VIX is still. Is there a Fed speaking? Is there just something I'm missing? Maybe. Yeah. Okay. Maybe that. 1:30 p.m., 1:40, 3:30. We do have 3 Fed speak things. Logan's. Lori Fed something, Federal Reserve, that guy. And okay, this is making a little bit more sense to me. See, I will agree, this is actually somewhere where I do get things a little wrong because I'm like, oh, I don't really focus on the news too much. So there's moments where there is things coming, and that's why volatility's increased, but it's not a directive. So like CPI, or FOMC. Sometimes I'll forget to look at the economic data at the start of the week, and I'll be like, oh, yeah, like, obviously volatility's up. We have FOMC. So that's where I do get thrown off sometimes. So that's one thing I do got to get a little bit better at. It's not that, it's just, it's the lack of not looking at the news that you don't see some things that would obviously make the volatility markets increase. So, anyways. But like I said, the volatility index is still holding support here. So this is like, why are we doing that? So volatility is holding support into that 261. So obviously we're getting a little bearish off that 261 extension. But anyways, and obviously if 261 trails back, 161, etc. One second. Where's that? And again, like we said, the market internals on the FANG just had a pretty decent pullback, a little bit here. So it's just one. It's a Friday, guys. It's trading like a Friday. No big deal. We're getting a little divergence from the Qs and the SPY. But that volatility index being up like that is very interesting. Again, that makes me a little skeptical of markets, but maybe it's just because of what we got going on later today. Maybe it's the Fed speak stuff. But while the VIX is holding like that, you got to be a little cautious on the long for the market still. Okay, so there's our retrace down to the 161. All right, obviously 261 go 161. 261 go 161, and yes. All right, since mainly this is what's driving the market right now, I can tell. So again, right now we're having a bearish pullback amongst most of our FANG. So obviously it looks like the SPY is finally catching up a little bit to that, and Whoa, 1 second. The volatility index is still holding that support. So again, wait, hold on. I want to move this over a little bit. We're going to move this over. Starting to do a little bit of bounce there on some of the FANG. So again, what's interesting here is the uptrend holding on the volatility index. So again, we still have a market that's slightly increased in fear. So the markets aren't just going on an absolute tear. We also have a lot of selling in the FANG names of the market. So obviously that's not helping. ISM services are about to be coming out right now. Wait, unless somehow that's, yeah, ISM services doesn't say delayed, so I imagine it'd still be coming. Do 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 do. Again, VIX still holding up. Again, with the VIX moving up like this, we are not immediate in the moment. We're not long bias, obviously, because momentum is increasing on the VIX. That's hard for the markets to go up. Magnificent 7 stocks are not performing very well, so on and so forth. Yep, Steve, 261 go 161, 161 go 261, 261 go 361, 361 go 423, 423, 361, 361, 261, 261, 161, 1610, or sorry, 161, 100, 100, 61, 50, 38, 0. So now, obviously, if Fibonacci continues, then what are you going to expect? You're going to expect that this market goes from here down to there. All right, and if Fibonacci were to continue, then you expect you break the what? You break the 100, then you go down to a golden pocket. Look at what's happening to the VIX. Remember what we said, guys. I know we say a lot, but what we say, we got to do what? We got to pull the VIX back to where? Uptrend support. If uptrend holds, that's what would what? Top the market. You see that, right? Is that not clear as day how we've topped this market? What do? We literally did the same thing for the past 3 days in a row with the VIX. VIX goes into an uptrend, we pull the market back. In this case today, it was a little different. We actually went long the market to start because we were pulling the VIX back to support. Once the VIX got to support, then we said, well, let's see. Does it hold? Does it hold? And if it does, we got to be cautious that that can top the market. So we're using the uptrend breakout, pullback, retest of support on the VIX and bounce to roll the largest globally traded ETF in the world. All discussed for free on the tubes. I don't understand why CNBC doesn't have this live. Why aren't they showing that? No, I'm just kidding, but I mean, generally speaking, if I were to tune into CNBC, this is what I want to see. I want to see someone telling me why the market is topping in real time here, why it's going down to these prices in real time. But they never seem to show me that. I just don't understand why. Also, vice versa, we did say too. It just depends. We're like, if we do end up breaking down and then the VIX goes into a downtrend here, then that's what's going to allow us to keep blowing the market up. But like we said, we don't know that until we get into this level and just let the people who control the market decide. And they said, well, we want to hold a bounce on high or low. Okay, then we're going to wreck the market. Okay, so probably a good time to throw some volume weighted average prices on this bad boy. So we're going to take some VWAPs, toss them on the high as per usual. Then we're going to take the last one and we're going to look for a retrace to the VWAP that is right on the screen. It's right there. You can't, well, we're going to go right to here. I'm probably a little late, but it's going right there in that box. Again, market's going to pop up, pretty much go right to that box, as I said, right there. Ding, 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 ding. Why? Because that's the volume weighted average price of the last sell-off. Again, if you look at the market, right, so it was down, false green, down, false green, down. So we're anchored to the last red after the green because people thought that was a low, so they bought and stopped out. So we take a VWAP, anchor it there, and there you go, bing, bing. So that's that little counter pop completion. How are things moving? The FANG are still not doing well. How about everything else? Now the S&P is moving red, NASDAQ 100 moving red, NYSE moving red. So now there are less things moving positive in the market than were before. So that's even worse. So yeah. I mean, just another. I mean, guys. I mean, that's just another solid day. You just can't even. You can't even. There's nothing to complain. It's actually a beautiful Friday. I mean, it's a fantastic day. I mean, honestly, the SPY first did our counter long target suggestion. VIX pulled back exactly to our sell target destinations, and then bounced support right into the support over under. SPY has gone up to 161261 off gap. I mean, all's good. Now, right? See, this is what we're thinking. What are we thinking? So we basically know if at any point any of these market internals kind of start to bounce a little bit, then obviously this can bounce a little more. At which point we'd be looking where? To, again, this 1618 to top down volume weighted average price. So pretty much this bounce level is up as far as like there for now. And again, it's kind of, you can see right here if you look at the S&P issues, look at what's going on. All right, so you see how the actual market internals on the S&P right here, you have two green. Zooming in right there, so you can see these two green on the S&P. You can see a little green here, etc. Not that that's a really big deal, but you know, we can clearly see behind the scenes there's green, right? So if I was looking at this going up and it was green, but these weren't green and nothing was green, I'd be like, that's not legit, right? But there's legit equities in the market that are getting bought in real time that's allowing this little bounce to go back to these volume weighted average price levels. Two 6 1 go 1 6 1 2 6 1 go 1 6 1. All right, so now if the market wants to remain bearish on the 1 minute, this is pretty much its time to do so. So this is arguably a 1 minute VWAP lower high, right? And what we're going to need to see happen is what? You're going to need to see some red coming on the S&P. You're going to need things to stay red here. So we just dropped out on the FANG, so that's good. But I mean, everything else is like okay. So again, it's not like super. It's not a super bearish market though, even with that. But still, with the FANG going down like that, it's hard for the markets to continue rising. So again, that's a 1 minute VWAP off highs, sell, rejection, start, location. All right. Oh my goodness, there's resistance taking place at the 1 minute top down volume weighted average price VWAP. I mean, how, what? Who would have thought? That's crazy. Now, again, behind the scenes, what are we looking at, right? To see that. Oh, get out of here. Well, one, we know the VIX is in an uptrend, so we know fear has increased today. Number two, we see that the FANG, MAG 7, major market cap, still going down. We can see here on the S&P issues, it popped up, had a little red there, some red, etc., etc., etc. So it's all basic stuff, but we're not seeing extreme selling, right? If the market was extremely bearish, like the S&P issues would be going down, some of the issues on the NYSE would be going down, volume on the market would be going down. So it's not, again, we're not in a super like bearish day by any means. We have a fearful market with Fed speaks and a little selling in the MAG 7. That's pretty much it. So it's not extremely fearful right now. All right, so we've done the counter pop. We've tested the 1 minute top down volume weighted average price. We did our initial rejection, and now it looks like the market's held support off this low with the 1 minute volume weighted average price. I'm going to throw this on real quick. Low. Yep, so you can see there, see how we have the low right here. A 1 minute VWAP there, held support. All right, so now we're going to be looking at possibly a reset up into the 5 minute. So if we take out the 1 minute structure, then we'll look for a squeeze up into the 5 minute now. Again, so this is how the market is positioned. Like that. Let me take this off. Bing, bang, boom. Man. Let me check one more thing. I gotta look at my 30-minute SPY. I got a lot going on that one. I'm gonna take, well, once. Yeah, I don't even need this stuff anymore. I can do it in 2 seconds. Regular trading, 1 minute, 50 SMA. So here's like another little tidbit of information. Not that it's really that important, but you can see, right? So on the day, the market was positive on the 1 minute. That's a 1 minute 50 SMA back test. So the same thing we do with the 30 minutes and everything, that's a 1 minute doing it, but I don't really pay attention to the 1 minute. But obviously it's just to emphasize the point. 5 minute, right? If you look at a 5 minute, 5 minutes positive up. Look at a 10 minute. No, that's right. I don't even have 10 minutes. I don't even know why that's there then. Maybe. Anyways. But yeah, so we're still above the 10-day. Yep, still holding. Okay. Again, guys, right now the market is just still below the 1 minute volume weighted average price from the highs. So again, this is where a lot of people's volume is located from that sell move. So that's why we said when you first come into it, you look for rejection to lower high. If it gets held up and starts to roll up, then this becomes a stop out and market can squeeze back up into 5 minute. So it would definitely appear that some of the 1 minute traders there on the day have been stopped out just with the way that candles moved. Now, like in the very, very micro, very micro, 1 second. This is what you would see happen. now that we've broken through this little VWAP zone, for the market to get the 5 minute, which is up here, 5 min, I'm not even going to type that out, it looks terrible. You need the market to hold above these VWAPs. So you're probably going to see a red candle, and then it tries to hold here. And if it holds, then it can go. And if not, then it's just kind of off the table. So this is that little 1 minute over under VWAP zone right there. Right? Because again, right? So this is very, very micro stuff, but it's fun. So 1 minute pops up, then it has to hold pretty much this VWAP zone, and then it can move to a 5 minute. That's obviously if it doesn't just break out, go, blah, blah, blah. It's the same thing with like the VIX, right? It only has 2 places it can go, generally. It's either going to go up or it's either going to go down. So you're either going to go up to your target or you're going to pull back immediately to your most recent breakout, right? That's all that really is right there. Also, we already should have had a VWAP here off this previous low, like right there, and then also this one here. 1 second. So that tells us that our current VWAP kind of support pullback over unders are right about here. So yeah, I mean, really, as long as the markets maintain above that box on the low, you can still ride it up to the 5 minute. Hit her with a little righty poo. Let's see what the market internals are doing to make sure those aren't getting just destroyed or something. Yeah, FANG are starting to bounce a little bit. So we've actually had a little trade of hands. So you can see the S&P issues are going down now, but the FANG are going up. But I would still say that we're going to bounce it up because the FANG are stronger than the S&Ps and blah, 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 yada, yada, yada. Actually, it's probably a good time to look at the VIX real quick, because you see how we use the 30 minutes and the 1 hour to bounce the market. 1 second, clear. All right, so today's bounce on the VIX was the 30 minute and the 1 hour. So let's go to the 30 minute real quick. So ready? Look at the 30 minute here. Ready? Watch. So where do we bounce the market on the VIX? Right at the 30 minutes. So if we look at yesterday, right? Yesterday the market broke out into an uptrend over the 30 minute, and today was a back test, right? And then support, hold, long bounce. If we go look in the immediate, we see that the market on the VIX is pulling back. So where is it going to pull back to? So let's look at, say, the 1 minute VIX. What's the 1 minute VIX, right? So if we look at the 1 minute VIX, we know that the 1 minute VIX entered an uptrend where? Here, here. So where is the 1 minute VIX back test? Here, right? So real quick, let's look at this. Let's zoom out a little bit on this chart. So from yesterday, look at, ready? Yesterday, the 30 minute went positive here, so it went into an uptrend. Then it pulled back to where? To support, bounce. And then what happens here on this intraday? After we bounce the 30 minute support here, the market on the VIX goes up. So much so that it breaks out the 1 minute. So the 1 minute goes positive. Where's the 1 minute back test? Here. All right, let's look at a 5 minute. Oh, so we've done a 30 minute support bounce. We turned the 1 minute positive. We even ran it up to the 5 minute. We broke out the 5 minute here. Where's the back test? Here. All right, let's look at a 10 minute. Where is my 10 minute? Where did it go? What? That is weird. Thought I had a 10 minute saved. I should. Weird. All right, now let's look at a 10 minute. So if we zoom in on the 10 minute, we bounce the 30 minute, we break out the 10 minute here. Where is the 10 minute back test? Here. So what I'm showing you is literally how it's all the same exact pattern over and over and over and over and over and over. All right. So, like in the immediate right there. So know this morning how we said, hey, we're going to pull the VIX back to this level, and then we may look for support. All right, that's basically the same thing that's happening in the immediate with the 1 minute, the 5 minute, and the 10 minute. It's not that we're looking for support. You just know that's how the markets can move, right? So we know that if something breaks out, it has to backtest at some point. All right. So what we know is that after we bounce the 30 minute, what are those time frames that the price of the markets are running into, right? We know we bounced the 30 minute, but if I look at, say, a 1 year week, oh, sorry, wrong stuff. I need to be on the VIX. Sorry, if I go up here, dang it, will this friggin' load? There we go. If I give you a 1 year weekly chart, right? Well, the price is not really near it, so I'm not focused on that, right? We're not above it and back, so we're not looking at that. So what about the daily? All right, well, we're way above the daily, so I know price isn't going to interact with that for the moment. All right, well, what about the 4 hour? All right, we're way above the 4 hour, so I'm not even thinking about that. All right, what about a 1 hour? Oh, actually, we're very close to the 1 hour. Well, this was all this morning, right? We saw actually, yeah, the 1 hour broke out yesterday, but it hasn't yet back tested really. I mean, it had like a quick back test here, but not more of a bigger one, if you will. All right. So that's a possibility. So that's why we used it this morning, because that would make sense. The 4 hours too far away, the daily's too far away, the weekly, et cetera, et cetera, et cetera. Oh, we get down to the 1 hour. All right, the 1 hour's in play. All right, let's go to a 30 minute. Oh, actually, yeah, we started a breakout on the 30 minute yesterday. We don't really have a back test. All right, so that was the back test this morning. Okay, let's move down to a, what was it going to do? Move down to a 5-day, 15 minute. All right, let's look at the 15 minute. All right, the 15 minute is right there. Does this have a back test? No. So this actually broke out, right? It broke out and it doesn't have a back test. So arguably that 15 minute needs a back test, right? Well, what is the market going to back test before the 15 minute? Because the 15 minute's all the way down there. Is there something that might prevent the VIX from falling all the way to back test the 15 minute right now? I don't know. Let's check. So then we get up getting into what? We get up into a 10 minute. All right, so the 10 minute, and let me delete some of this stuff real quick. So now we look at a 10 minute. We go, okay, the 10 minute broke out here. So there's the 10 minute back test. And you can see, look at the computers, look at the algos. Look at the computers wicked it a little bit, and now we're kind of riding it. So we're looking at a 10 minute back test right now. Now, if the 10 minute holds support, then what? Then that's not going to allow us to go down to where? The 15. And the 15 is right here I'm highlighting. I know I'm moving very fast. I mean, I do this stuff all day, every day. It's like riding a bike for me at this point. All right, so there's the 15 minute. Well, we know the 15 minute can't be achieved if the 10 minute holds support. All right, so on and so forth. Well, what about the 5 minute? Oh, well, the 5 minute was right here and that back tested. So it's the same thing, right? So where's the 5 minute? 5 minutes right here. So the 5 minute broke out and back tested. Well, the 10 minute can't be achieved unless the 5 minute breaks down. What about the 1 minute, et cetera, et cetera, et cetera. So now you see it's the same exact pattern every single time frame, right? The 1s and the 5s and the 10s, they can get a little busy. They're not as reliable. But as we start to get down into the 15 and the 30 minute and the 1 hour, very reliable, right? Same thing with the weekly and the dailies and the 4 hour, very reliable, but frequency too slow. Not that they're not useful, they just don't come into play as often. So we don't get that opportunity we're looking for as frequent. All right. So that being said, that is how you fractally move through markets and understand uptrend, downtrend across pretty much every single time frame in real time. But at the end of the day, what I just showed you with the 1 minute, the 10 minute, the 5 minute, that is all for just learning the idea of fractal nature of markets. We don't necessarily look at the 1 minutes, the 5 minutes, and all that stuff for the meat and potatoes. The meat and potatoes is really the 30 minute and the 1 hour here. And that's why we were bouncing the markets up on the VIX today and so on and so forth. But, like I said, after we've gone long the 30 minute and the 1 hour, we have now completed 1 minute, 5 minute, 10 minute back tests on that pullback. The next one on deck would be the 15 minute. Now, obviously, the 15 minute is only achievable with the 10 minutes staying down, right? So if we look at the 1 minute chart right now, what do we, oh, actually the 1 minute's not even down, sorry. So the 1 minute still works, the 1 minute's still in an uptrend, but look at how negatively sloped it is, right? The 1 minute downtrend's so negatively sloped that, you know, we're fading this market on the VIX down to that 1 minute. But yeah, so we know the 1 minute's still positive. So the only way to get the 15 minute is you got to take the 1 minute negative and blah, 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 right? So right now we have a 5 minute that's negative that now went to the 10 minute. The 10 minute's negative. We're now on the 1 minute. If the 1 minute goes negative, there's really no other trend left to stop the market from going to the 15 minute. I mean, yes, if you're looking at, say, a 13 minute maybe. I don't know, right? But there's not a whole left in that market to stop it from going there. Not that you're going to look at every single one of these trends like I'm showing. I'm literally just doing it to teach you. But yeah, I mean, that's the point of it. So anyways, hope you guys like it. I know there's only 8 of you in here, but the things you guys are learning here is going to keep you ahead of 95% of every other person in the market. Basically, if you stick in this stream for just a couple weeks, you should be better at the market than probably 99% of everyone on YouTube streaming. Heck, probably trading, honestly. Again, if you hang out in these streams and you watch the markets the same way I do, you will be on the correct side of the market 95% of the time, like I said, and you will know more or be able to accurately watch and predict the market more than any other person on YouTube, probably even me, okay? So you can, you know, if you hang out here a couple weeks, couple months, you can start going into other people's YouTube streams and telling them where the price of the market's going to go, right, if you want to. That being said, I'm going to go get a coffee, so I'll be back. Again, we're going to sell right down to the 15 minute like I just pointed to. It's pretty straightforward. You know? Like I wish, like sometime, I don't know. I don't know. I don't know how else to say it. That's just what happens. And obviously you can see the market on the stock market's gone up into the 5 minute VWAP target, right? Yep. So, I'm going to be right back. I'm going to get a refill on this coffee. Ladies and gentlemen, boys and girls, the crowd goes wild. The crowd goes skippy. What about Bitcoin? Honestly, let's just all pray that my analysis on Bitcoin is extremely wrong, because that would be great. Oh boy. Man. Do. Has there been anything decent today? Kind of floating around looking at some of the penny stocks. I mean, I looked today, and again, there was a couple like okay thing. Not really, nothing really good. Which, and again, I mean, there's always a little something, but it's been kind of a lackluster market on the pennies as of recent. Not, I mean, there's still some moves, obviously, but just hasn't really been exciting. I mean, then again, there's plenty of stocks moving all the time, but just hasn't been the greatest. Well, I mean, I guess I can't complain with that. 11%. MIGI. Well, no, like I said, there's always some movement in the penny stock world. I'm just saying, like, the momentum hasn't been absolutely through the roof. We've had some, what mainly has been quick pops and then big fades. We haven't had kind of like the multi-running big boomers for like the past couple weeks. We had them a couple weeks back, but it seems the last few weeks have been a little slower. Probably won't take too long there, Axe. All right, so again, buy signal, markets doing very, very wells. I'm going to delete some of this stuff off just because I'm going to throw my fib back on, but that's about it. Or I'll open, previous day close. Let's check out the fib from the current sell signal. So we've gotten that guy, and then that. Alrighty, ladies and gentlemen, you guys already know what's happening. Anchor this low, anchor previous low, market's pulling back to there. You got it. Ding, 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 right there. See that? How do we know that the candle would pull right to there? I mean, arguably, I kind of did it as it was happening, but it's, again, just use previous lower high, or sorry, just use previous, higher lows, anchor bottoms, generally speaking, that's where your next 1 minute low will be. And that is, ladies and gentlemen, is how you predict where a lot of times the absolute low of a current 1 minute candle will be, and or the low of a current 1 minute pullback cycle. Just like that. Ding, ding, ding. This is a perfect example of where, perfect example of where someone is watching a market go up. They're like, yes, all right, I'm going to buy. So they buy right into this candle that's coming through the previous high. And then what do? We look at the volume weighted average price from the previous low and go, the key volume is right here. So instead of buying up here, we pull the market down and then get long, right? And now you're a part of the wave up. And then you're hoping that someone comes in and goes, oh yes, we're about to break the previous high. Then they slam the buy button and break it out for you. And then what do? You anchor the previous low, just like we did. So we start throwing an anchor on that low. So now we have, again, the anchor is now to this low. And now our new pullback destination is arguably here. Alrighty, ladies and gentlemen, boys and squirrels. Ladies and gentlemen, boys and squirrels. That's good. Oh, well, something must be working because I'm watching my P&L for the day shift from red to green, so that's good. Took on a couple new positions that kind of started red. Now they look to be doing all right, so that's good. MGI. Gipper. Must be that guy. It's actually, that's what, yeah, it's the swing long on the market that's helping bring the P&L back to green for the day. Do. Let's go, baby. Pump the market. Keep it pumping. Let's go. We obviously know what market is swing long. We are macro long markets. You can't let the little pullbacks on the day shake you guys out. Come on now. So right now we're just looking to pull the VIX down to the 1 hour and the 30 minute, which is pretty much where we're at. We're at the 1 hour right now. If the 1 hour breaks down, then we go to the 30 minute. If the 30 minute breaks down, markets keep going up, blah, 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 blah. It's pretty straightforward. I'll bring down the VIX wrap. Meow. So, ready? We're going to go into the 1 hour, right? So what do we do today? We broke the market up and it was going well, and now it's not going well, and whatever. So now what are we doing? We're pulling the market back to the 1 hour. So that's done, right? So now we're coming into what? The 1 hour over under. And now what? That means we also have the 30 minute just below. You see the 30 minute down here, 30 minute trend. Bing, bang, boom, chicken wing. So what now? So pretty much it doesn't really look like a whole lot because it's really not. And it's just we're on the 1 hour. Now the next thing will be down to the 30 minute. So essentially, the VIX is at the over-under again, which means the uptrend, downtrend starts. So if for whatever reason today, going into tomorrow, we break the VIX down, that would be a catalyst for the markets to continue going up, right? So it's nothing new, pretty straightforward. As we always say, you're just watching the VIX today. Markets are in a buy signal. VIX is the one that's toying with us up and around levels. It's been a phenomenal day, ladies. Phenomenal day. Ooh, look at our friend little Bitcoin going up. 120,780. Gotta love it. Gotta love it. If anyone would like to know, I buy Bitcoin currently 3 times a week. Every single week, and been doing that for I don't even know how long now. Long time. Years. So yeah, I pretty much dollar cost average Bitcoin, and when it goes on a big dippy, then I'll buy some more. But pretty much just have core position along with, dollar cost averaging every single week, 3 times a week. And then when I think it makes sense to throw in a big buy, I guess I will, but it hasn't been that way for some time. So yeah, anyways, so that being said, I would love for Bitcoin just to obviously continue going higher for the end of times, but I'm assuming at some point that will stop and we'll have to reset and so on and so forth. Oh my goodness, everyone is just like, what is going on? The market is just straight pumping. We are straight pumping the markets to the moon. Remember, the uptrend started back here at the vertical line. So why are we long the markets? Because the uptrend started back there. Which, who asked the question? It was Steve about the 50. I don't know if you're still in here, Steve, but so look at here. This is a great example. If I would have bought the SPY or UPRO SPY, whatever, if I would have bought on the day that the 10 SMA crossed through the 50 SMA, it actually, well, it would have been the same day. So this one actually, yeah, when the 10 crossed through the 50, we were same day. So that one actually did work. It's not always the case. Like here's one, for example. Well, this is FOMC, so it's really not the greatest example, but here's one where if you waited for the cross, like if you wanted to be bearish on that day, yeah, the market breaks down. You could have caught that leg by trying to get it through the 50. And then obviously if the market came back up through the 50, you'd stop out, right? But if you'd waited for the market to cross, you would have been shorting on like this green candle coming up, and it would have just blown you out. But that's FOMC, so arguably not the best scenario. Whoa, man. Here's another good one. So this is a good one. So on this day, if you would have bought at the end of the day close over the 50, you would be a part of the gap up the next day. And then the market doesn't cross until this candle. So if you would have waited for the 10 to cross the 50, your entry would be, it would have been on this candle here. So if you would have waited for the 10 to cross the 50, your entry would be on that candle. Somewhere in this candle right there with the yellow line and the vertical line crossing it. All right, and then you can see what happens the next day. Well, 2 days later or whatever. So you do get a good move, and then it goes right through your entry price, but not below the 50. Whereas if I had entered at the 50, it basically comes down to my entry, but never goes negative. So that means what? That means that the uptrend for the market is still intact. So if I'm long here, market is still positive, right? So that's a perfect example of when waiting for confirmation of a 10 over a 50 gets you a later entry, elevates the risk of your position against future pullbacks, and in regards to where the trend of the market's actually at, right? Actually, if you had entered right at the 50 SMA or like right above it, you actually would have never even went red on that pullback. So that's the other amazing thing, is that if you had gotten long here, right, you never actually go red. That market comes down just to about where your entry would be, right? And that's the power of getting in the market right at the 50 SMA break. When it's legit, is you have the best entry for the market. Well, that's not entirely true, but kind of. As it relates to this system, you do. I can only imagine what the news is like, right? It's probably something like markets are positive, extreme gains. Nobody cares about AI anymore. Let's see. Stock market news today. Let's see if we can predict it. Or was it... I don't know. Who cares? Oh, here we go. Dow rallies 400 points to record as Wall Street looks past shutdown fears. Stock market today. NASDAQ records as AI buzz keeps going. Who saw that coming? Stock market today. Dow rises as jobs reports and Nvidia and Tesla gain. Or maybe stock market rises because we entered a buying operation, an algorithmic programmed buying operation on the stock market last week, end of day Friday. So duh, things are most likely going to go up. So duh. The NPCs that work at these news organizations are going to start writing articles about things going up because it's what their eyeballs can perceive. Gosh, it is such a beautiful thing. I love it. I absolutely love it. It's the best. It's the absolute best. And it was just, I'm pretty sure it was just yesterday, right? It was just yesterday when the market was right here and the VIX was breaking out that they're posting articles about how the market's gaining this morning and things are great. And then they pretty much just waxed the entire retail market. And then it was probably like, oh, maybe things are shaky. And then it was back up. So, so comical. Pretty much what you have to know about news. I can even map it off. We just go by vertical line to vertical line. Alt-V. All right. Alrighty, so Alt-V. And we're going to go back here. We'll go, oh, there's already one there. So this is how this stuff works. For every buy signal is where the news flips. So for this, it would be Alt-V. I mean, I can just read. It's endless. It is endless. All right. So this is how this is pretty much going to work. From this. This is how this works. News positive. News negative. News positive. It's so fun. News is positive. News positive. News. I mean, actually, I kind of missed that one. This one needs to be over a little bit. And then it actually goes back to a long Alt-V. So this would be like, they don't even have time to do it, but this in theory would be news neg in here, and then it would be back to news positive. And I'm going to do this until I finish, even though you guys get the point. News positive. And then it goes news neg. Negative. And now we're back on news positive. And when I say news positive, I mean majority. Like, majority of the news is going to ultimately be positive. Of course, there are going to be negative and positive in there, but the main trend of the news is positive, as is the trend of the market. So, again, when the markets go into a buying algorithm, the system flips the news to favor the direction of the algorithm. If we're going into a selling program, the news flips to favor the direction of the selling program. AKA, if we want things to go down, spread fear. AKA, if all of me and my buddies bought a shit ton of the market, we want it to go up, pump news positive. So that's how we cycle the news flow and information flow to the markets. It's a very well-oiled and very well-organized system that we have going on here in the markets. Don't be fooled. Don't be fooled, young one. Exactly, X. This just in. Stocks are up today. Like, oh, well, thank you, fine sir. I would have never guessed. Who would have thought? Also, I'm going to bring up the VIX real quick, just because, obviously, but it's nothing special, but just so you guys can kind of visually see it, So think about this. Think about someone who may not use SMAs, just looks at pattern. They'd be like, all right, well, if the market on the VIX bounced here, then we sold all the way back down. Like, that's a double bottom and that's a bounce. Like, yes, arguably true. But why are we really bouncing here? Is it because of the previous bounce? I mean, arguably, yes. But why did we even bounce here in the first place? Why? Because this was the 30-minute VIX uptrend, downtrend. We held the uptrend. So we went up. Now we've pulled back down to test the 30-minute uptrend. It's not that we want to do a double bottom. It's that the market is seeing if it can hold the uptrend, which is what? Which again is, you nailed it, it's the 30-minute trend right there. So you see it right there. Look at the 2 wicks of today. That's what we're doing. We're not doing a double bottom pattern. We're not doing a pattern spelt with 2 D's, pattern. We're doing a 30-minute open, high, low, close, 50 SMA, algorithmic back test. That's what that is. These are computers and algorithms that are taking in data. Right there. Those 2 tags. Call that tag 1, tag 2. Thing 1, thing 2. At this moment, when the price hit that SMA, somewhere in the world, that triggered a response, an if-then statement, right? Which was, if market stays above 50 SMA on VIX, then that is bullish / positive, so long. That's what a computer is reading right there. Probably not as simple as I just made it, but that would be the basics of a computer's thoughts, if-then statements. And it just happened again here. And that's the same thing with our brain, which is if markets remain above 30-minute, then VIX trend is still positive, not negative. If 30-minute trend breaks down, then price is negative, not positive. What are the repercussions of such event? VIX negative, markets more bullish. So that's how computers talk. They talk on SMA calculations. Okay? Because SMAs are the one constant language in the stock market across brokers, multiple platforms, etc., right? It's universal language, right? It's like the English speaking language, right? The most well-known and the most used language, English, right? Generally, if you go somewhere, like, someone knows a little bit of English, right? Very universal, right? Not everyone knows how to speak Mandarin, right? Or Spanish, even though that's very popular too. And Mandarin's relatively popular. But either way, the point being is SMAs are universal stock market programmable language. It's understood no matter where you're at in the world or what platform you're using. The 50 SMA is the 50 SMA. Give or take some decimal points here and there depending on platform, right? But some dude in China looking at a bull flag on the S&P 500 is almost certainly not looking at the same pattern bull flag as some dude sitting here in the United States. That is not consistent. There is no universal consistent language from your eyeball to my eyeball in pattern recognition, right? It's not a thing. But the 50 SMA is, right? So SMAs are the stock market universal code language. Boy, oh boy. Let's see how little Gipper Finau's doing here today. Excuse me. Well, excuse me, gosh. Of the little penny stocks I decided to buy today, little Gipper was the best one. This one's got me a 14% return today. Almost 15% return. And I am down 3% there, 5% there, 8% there, up 14% there, 4.3. So my cumulative gain for the day is at 5% with my winners and losers across multiple ones. So, I mean, still gaining, but not massive. Yo, Gipper Finau. What the heck? What the heck, man? What Yo, Gipper. Oh, Gipper Finau. Do. Also, too, and just because I was just mentioning, if you look at Gipper here, a little Gipper, it's coming into that weekly 50 SMA. So price points of like $1.50 are kind of big. Obviously, it's gonna have to break that out for it to really do anything special. But yeah, anyways. Ooh, 121,000 for the old Bitcoin. Also, guys, here's another one thing that I we didn't talk about the other day, but I'm basically going to show you how you would pick this price point for Bitcoin as a target on the upside. So, ready? We're going to do this real quick. Actually, I'm going to leave some of this. I'm just going to change this to the weekly. So it's called a weekly upper distribution. So pretty much, ready, watch. So obviously you guys know we talked about this one yesterday, I think, how Bitcoin all-time high, then it goes down, and then it back tests the blue VWAP that we anchored to the high, and then there's a lower high, and then that fails to go lower, etc. And then it comes up and breaks out the VWAP here, and then what? It just goes up to the upper distribution, right? So this is the upper distribution of this anchored VWAP. Then when we break through the VWAP, we go to the upper distribution of that volume. So all we've really done over this past, say, couple days is we have essentially broken the market on Bitcoin out of its weekly VWAP resistance over under trend. And as a result, we have squeezed the market up to the upper distribution. So that would be from here to here. So this is the, and actually let me bring you back a little bit. So this, here you go, ready, watch. So this was the bounce into weekly VWAP. So I'm going to go W and then VWAP, right? So that was the weekly VWAP right there. Weekly VWAP resistance down. Does not break previous low. So there's no lower low. Ultimately double bottom. Then bounce back up. Breaks out weekly VWAP. Goes to. This is called upper distribution. So I'm just going to say UD. Or another way that I think about this is max pain for the weekly chart. So for the weekly sellers that jumped in here, max pain would be here. Stop them out. All right. So all we really did over the past couple days is really just run up the Bitcoin market to some upper distribution levels of the all-time high weekly selling trend. Yeah. Oh, gosh. Yeah, so that's the thing with Bitcoin. It's like, I just basically put in money that I don't even think about. It's like you'll go on an average day and spend 25 bucks here, 50 bucks here, getting some food or whatever random stuff. It's just like I just take that money and just put it towards Bitcoin every week. And again, at the end of the day, all the things you work for your entire life, the computers I'm sitting in front of right now, the couch in my living room, and pictures in my office, that beautiful YouTube plaque that says, "Congratulations, Connor, you hit 100,000 followers." I mean, again, these are all material things. I mean, even Bitcoin's digital. It's not even really a material thing, but like stocks and all of this stuff. Again, if we're lucky to live 100 years old, most of us are going to live like 70, to be honest, and then we're going to die. And we will no longer exist on planet Earth, along with all of the material items that we've ever worked for, all the money that we ever went to get. So as far as putting money in Bitcoin, does it go up for forever? Does it crash to zero? I don't know. But at the end of the day, regardless, I'm not going to be able to take it with me if it's 0 or 5 million, right? So my thought process of putting money, say like towards Bitcoin or towards investments and things like that is, regardless, it's just material items. Dollars are material. You can invest them, and yes, maybe the values go up, maybe they go down, but at the end of the day, what makes me feel better is knowing that regardless, I can't take any of it with me when I go. So I'm less scared of putting money towards investments in that regard, because I know that tomorrow I can always go work some other random job, whether that be at McDonald's or whether that be farming or whether I just pick up a job as a painter. Careers can always change. There's always a way to make another dollar. So, I don't really get scared in that regard, about putting money towards Bitcoin or taking, or like, oh, I could have bought some burgers, but, I went and bought Bitcoin, right? So you're just trying to make a little bit of a better life for yourself while you exist on planet Earth. That's really all you're trying to do, is just make yourself a little bit more comfortable, do the best you can to hopefully give some away here and there, and just enjoy what you got. So Steve, GIPR, same thing as always. This one was okay as far as a setup. Like I said, I was getting kind of bored the past couple days, not like putting on some like little positions here and there with some penny stock stuff. So today I looked at GIPR and I thought, you know what, this one's got like an okay chance. So I decided to go for it, and it ended up working out. I actually just closed it out for about 14%, 15%. I'm like, that's fine. Even if it blows up, I don't even really care. And the reason is because I know I'm not necessarily first. So if you look at the 30-minute, this is not the right chart. This is the wrong one. We need to be on GIPR. All right, so I know what? I know that the uptrend started just yesterday. So the thought behind getting long GIPR today was just simply, I know the uptrend started just yesterday, right? And they held it. And then all the volume is, well, so far coming in today. You can see all the volume really coming in today. So maybe this has continuation. Again, I don't really care. But anyways, the uptrend just started yesterday. So I'm not the first, but this is only one day after. So still favorable in terms of kind of being early, right? So I knew I was a little extended from where I'd like to be, but the uptrend just started yesterday. And if we look at the 4-hour chart, I know that the 4-hour just broke out yesterday in the after hours. So the two uptrends that I like to see are the 30-minute and the 4-hour when it comes to penny stocks specifically. I mean, most things anyways, but just in general. So we started the 30-minute uptrend yesterday. We started a 4-hour uptrend this morning or after hours. So when I go and I look at the chart this morning, I know that yesterday we started the uptrend. Then in the after hours, they broke it out of the 4-hour. This is the weekly up here. That's the weekly 50 SMA that they resisted. And so to me, I'm like, well, I know the uptrend on the 4-hour just started. So I was getting long in the pre-market session in this bottom area, just under the assumption that the 4-hour was up and that we were going to just basically have some sort of long move up. That was it. That was really my whole thought process was we started an uptrend. I'm going to buy into the low of this. I'm assuming that since we're only a day in or so, there's still some favorable momentum there that I can capitalize on. The downside risk would be that the market pulls back all the way down to, here. So yeah, I mean, that's pretty much it. Just seeing that we have an uptrend that just started yesterday. So I'm like, this one seems okay. So I took a small position on it because it wasn't right at the uptrend start. Still had some downside risk that was somewhat elevated. So I'm like, whatever. I'll put a little bit on it. Again, it wasn't like a fancy big trade. I didn't make tons of money, but I made a favorable 14% return on a position for my Roth IRA retirement account today. So I'm cool with that. So like that's a lot of these right now. Like I said, I've been trading my Roth IRA as of recently, and again, it's a smaller account, obviously for contribution reasons as well. But obviously each year it's going to get bigger with contribution. But anyways, in trading but the moral of the story there is yeah, I mean, it was an okay setup. I wouldn't call it a great one. I just thought there was opportunity, so I bought a little bit my Roth and made about 14% of my cash. So you really can't complain, right? You can make 14% on any money you deploy on any day, and within 3 hours, you got to be happy. So that's the way I see it. Uh-huh. Huh. Alright, sorry about that. It's kind of getting back over into his SPY. Gonna delete up. I mean, I don't really need any of this random stuff I put on the screen anymore, but you know. It's 11 o'clock on the day, and the market is a pumping. Ladies and gentlemen, boys and girls, sweet. Oh, sorry guys. I'm just kind of looking through some stuff, doing some reading. Yeah, there's really nothing else to say. Again, we pretty much capitalized on the market today best you could. Again, kept all you guys on the. I would like to think we keep you guys on the right side of the trend. I mean, I know everyone's got their own way of looking at things, but yeah, we pretty good day. I mean, again, market pretty much straight up. Market's in a buy signal. Said where the VIX would go, said where the market would go, all accurate. Again, that's a lot of days in a row they're doing pretty well. SPX, SPY, Bitcoin, all doing pretty good there. Volatility index as well. Yeah, so we'll probably end it there for the Friday sesh, because really no point of sitting here on a Friday all day long. That's not the point of this. So yeah, anyways, cheers guys. Make sure to share the video, hit Ricky G with it, and I'll catch you guys in the next one.